Hey everyone, welcome to LJ's Daily Housing Market Update. Today is February 6th, 2024, and let's get started with our interest rates. Interest rates for 30-year fixed conventional loans actually came down around 5 basis points to 6.99 as your national averages, compared to your FHA 6.22 for your top tier scenarios. So this is according to Mortgage News Daily. So the good news is that they came down a little bit. According to Freddie Mac, they do this on weekly basis, and their according to them is 6.63 for your 30-year mortgages fixed conventional, compared to 5.94 for your 15-year, 30-year mortgages. Okay, so when we say top tier scenario, that means your credit scores matter. The higher your credit scores, the better interest rates or the lower interest rates that you will receive. Your home locations will matter, your down payment will matter, your loan type, your loan term, your residency and units. So all these factors, they do matter when it comes to interest rates. So when you look at these headlines, don't just assume that you will get this. Just know that there's many factors that go into it. Okay? Your buying power is definitely going to increase when these interest rates decrease. So you guys can look at the chart here that if someone is qualifying in today's 6.99 and they want to get a mortgage for $650,000, their monthly payment, year principal and interest will be 43.20, compared to the same person if they were to get it when the interest rates were around 7.74. They can only afford $604,000 loan. So you guys can see that almost $46,000 more buying power to this household. So when we're looking at different households, we're going to compare two different households with our affordability calculator. Number one, this household is making around $75,000 in income. Again, it could be one person or more. Their down payment, they want to use around $45,000. Their monthly debt was around $100. We're going to use today's interest rates, averages 6.99, property taxes 5,000, property insurance about 1,500. We're going to keep this DTI, their debt to income ratio, at 45%. So as a buyer, you want to keep this as low as possible so you can afford your monthly payment and you can pay that comfortably. Okay? So you don't want to stretch this. There's going to be different loan programs that do allow you to go higher. So this family can comfortably make a payment of $2,700 and they can purchase a house for $371,000. So in New York, it's very hard to find a single family in that price range. So this family might be able to go with condos or co-ops or simply just wait it out, right? On this second scenario here, this family or this household has annual income of $135,000. Their down payment is around $65,000. Everything else remains the same as the first scenario. This family can purchase a house up to $729,000 and make a mortgage payment of $49.62. Okay, so when you are making these payments, you want to focus on making extra payments. You don't want to do this when you're really, tight on budget. You want to start doing this when you're a little bit more comfortable and you have some funds that you want to put towards your mortgage. It will have two positive effects when you make extra payments. You can either do it in one shot, you can do it on regular basis, you can skip some months. This is for your extra payments. So if you were to make, on the last scenario that we showed you guys, if that family decides to make $400 payment extra per month, they can save 6.6 years and they can save $238,000 in interest. So a lot of big positive effect making extra payments. So we know that not everyone can make these payments on regular basis. Your job should be that whatever you can afford, your first payment that you automatically set up for every first week of the month, great. Let that go by. As soon as that's done, send the second payment of 400, 200, 300, 100, whatever you can afford, and throw that against your principal. So when you do that, it will have positive effects. So your goal should be to pay that mortgage off. It will not happen overnight, but there's a process where you can save some money. A couple of headlines here. One of them from Baron here: how a delayed in rate cuts could stifle home buying. So we know that we have an issue where the Fed said, hey, we're not going to do rate cuts right now. we will see in March. So, and as soon as that was announced, first we saw the interest rate come down, then they start going back up, and they're coming down again a little bit. We just got to pay attention to that. Next was that your job market strengths are hurting housing affordability and as mortgage rates rise. We for sure know that, right? And your today's mortgage rates in February are slightly higher in the morning. When we took this screenshot just a few minutes ago, they came down around 5 basis points. So rest assured that your interest rates will never be fixed, right? Until you actually go in an application, you lock your interest rate, and then you're locked in. Right now, when you're just shopping around, you're just like these interest rates will be changing on daily basis. Okay, sometimes more than once in a day. Your inflation data. Your inflation is around 3.4% right now. So hopefully if this comes down, we will have interest rate coming down from Fed as well. The home prices in general have gone up over the years. Do not expect them to come down right now, especially when the interest rates are coming down. Simply supply and demand. There will be more buyers just like yourself that were waiting for these interest rates to come down. Now, since they're coming down, there will be bidding wars. So if you find a property, put in a solid offer and move on. And let's talk about a loan program today. This is going to be for investors. So if you're going to be investing and you're looking for a property and you don't want to show your income for whatever reason, right? You don't want to show any income to the loan officer. You simply say, hey, this is the property I want to buy. Can I get a mortgage on it? So our question to you is going to be, hey, how's your credit scores? Number one. If your credit score is above 720, then we can talk. How about your down payment? Are you able to make 20% down payment or more? If you can make 20%, great. Then this loan might be good for you. So, your DTI up to 49%, your closing costs 5 to 7%. So this is not for a first-time home buyer. We're not recommending this for a first-time home buyer who's going to live there. This is for investment. So where you will not live there. So the bank or the lender is simply looking at that property that you want to purchase, that subject property, and they're going to see how much rent it will come in. Let's say that for that property, you're bringing in $3,000 rent, and it's going to be $3,000 for your mortgage as well. If that's the case, then you can get that mortgage, right? You can get that loan. It's called DSCR. Debt service coverage ratio is a type of loan, is non-QM, is no income check. And the key points is that you don't have to show your taxes. You simply qualify on the property itself and their income that's going to produce. It can be only for investment, and your mortgage insurance does get removed once you hit 20% equity in that property. A couple of negative things as well. So 20% is for one unit, but if you want to buy 2 units or more, then you need 25%. On top of that, you need reserves. You need to have at least 3 months of reserves that's going to be in your account, so they know that if you can't make the payment for some reason later on, you have some money on the side. For this type of loan, you can use your gift funds, but just know the big negative effect is prepayment penalty, meaning you can't just get the loan today, and if you want to refinance it and get rid of this loan, you would have to pay a prepayment penalty up to 6 months of interest if you refinance within 1 to 5 years. Okay. So also, this is a borrower's BPC, meaning borrower paid compensation. So that's why the cost is a little bit higher, and you can get a loan up to $3 million. Okay, it's a great program. The way we like to put it, if you have an income, on paper, you're filing your taxes, you don't need to go through this route. You want to go through this route when you don't have your tax returns, or you simply want to see how much you qualify based on the property itself. Okay. Next, since we're talking about investors, the next 4 properties are new listings, and they're only available. They should be only for your investors. Again, these properties may come occupied with other tenants or homeowners, but we don't want any first-time home buyer to buy a property and then they have to deal with getting out the tenants. You should be excited to buy the property and move in right away. But on the other hand, for investors, it could be a good opportunity. You buy the property, it takes you a couple of months to get these tenants out, and then you renovate the place, and then you can sell it at a market price and you can make a profit out of it, right? So this first property is in Hempstead, New York, listed for $350, 3 bedrooms, 1 bath. The second one is listed for $384, It's 4 bedrooms, 2 baths in Roosevelt, New York. Another one is Roosevelt is 425, and it's for 4 bedrooms and 3 baths. And the last one is in Laurelton here. It's listed for 450, 5 bedrooms, 2 baths. Great for investment, right? All these four properties that we showed you is great for investment. So if you're an investor looking to flip a property, you can reach out to us. Next, guys, we want to teach you a term to learn for your mortgage side. Today's going to be commitment letter. Commitment letter is a mortgagee, your loan officer will provide that to you, is a formal letter to the borrower states that their intention, the lender their intention is to offer the borrower a home loan, meaning that the loan officer and their underwriter reviewed your file. They said, hey, we're good with your tax returns, we know you're well qualified, go ahead, we're going to give you a pre-approval that was done already. Now we're going to give you a commitment letter saying that we will give you this loan. Okay, so this one, when you see this commitment letter, it usually comes with conditions that, hey, I need you to explain this for me, I need you to explain this for me, where did you get this money from. So they might have maybe 5 to 10 different conditions that you have to clear with your loan officer, then you get cleared to close. So commitment letter is very, very important in your real estate transaction. The home prices in general, guys, have gone up over the years. You guys can look at the chart here. We always show you this to show you that, hey, don't just look at the short term. Always look at the real estate in a long term. If you're going to live in a property for a year or two and you're not too sure if you're going to be in that neighborhood for a long time, maybe it's not the best thing to do is to buy a house, right? You want to buy a house when you're sure that, hey, I'm going to be living here for a couple of at least 5 to 7 years. I have a steady job, my family's good in this area, and we're going to be building some equity over the years. Okay, so you guys can see this in Queens versus Nassau, 5 years, 10 years, and up to 63 years of your historical appreciation. Okay, and every day we want to show you who's involved in a real estate transaction. And today, let's talk about your real estate agent. Okay, your real estate agent is going to be an agent that's going to be representing you as a buyer. A lot of people are not loyal to their buyer's agent. They say, let me work with him, let me work with her, let me work with him, and let me see whoever finds me the best deal. If you're not being loyal, maybe they're not devoting all the time to you as well. So you as a buyer should have an open communication with your real estate agent and just asking them the question, hey, what kind of experience you have? Do how many houses have you sold in this market or this area? What can you tell me about schools, this neighborhood? So those type of things. And once you're comfortable with that, let that real estate agent send you properties. On the other hand, you should be looking proactively on Zillow, on Redfin, or Realtor.com, or any of the other websites out there, and send those properties to your real estate agent as well. Your real estate agent is sending you properties. You send them whatever you see on your end. So this way, both of you guys should have the same goal. The goal should be to find you a property at a reasonable price. Okay, so work with your real estate agent. That person is not going to only show you the property, but it's going to negotiate and guide you all the way to the closing. Okay, and guys, if you're thinking about buying a house in 2024, you need to work on your savings, work on your debt, and increase your credit score as much as possible. Okay, your down payment, your savings, you need to have at least 3 to 5% for your down payment and another 3 to 5% for your closing cost. Okay, so just have a good number that you can purchase a property when it comes to your debt. Okay, your to your savings. For your debt, you want to reduce your debt much as possible. If you have a credit card, and just make sure there's no late payments on those, and try to reduce your debt much as possible. And when it comes to your credit scores, you should be able to work on your credit scores, because it's going to be a process. It's not going to be overnight. Your goal should be you and your co-signer to have your credit scores at least 580. If you have at least 580, you can go with FHA. But that shouldn't stop you right there. You should keep going and improve your credit scores to 620 or more. So this way you qualify for conventional and FHA, right? So you can choose. And there's no limit how high you can go from here, right? You can have 800 credit scores. That's good for you. But make sure your co-signer have the same good credit scores as well. Okay? And if a agent or a loan officer tells you, hey, I can offer you 5% interest rate, 4% interest rate, and when you know the market is showing 6.99, you have to question that. How come you're offering me that? Ask them two questions. One, how much is it going to cost me to buy this day rate down, and what my savings will be. If my savings is $82 in this scenario versus it's going to cost me $4,000 to purchase this to buy this rate down, it's going to cost me, it's going to take me 4 years to get that money back. Do you really think I want to wait 4 years to get that money back, or do you want to do something else with it? Okay, you decide, and just know that if you're buying on the rate, you should know those following. Guys, we have 16 loan officer here at LJ Mortgage team. If you have any questions regarding any loan, we can definitely help you guys out. If you're a real estate agent, we provide you with all the tools, no desk fees, no office fees, up to 100% commission. So check out LJ Realty team as well, guys. That will do it from my end. This was LJ's daily market update. I will see you guys tomorrow. Thank you so much for joining.